Happy Monday, everybody. I hope you had a great weekend. Today is Monday, December 20th, 2021, and this is your Monday market update. This is the second to last week of the year, and there's a seasonal aspect to the market that should make for a strong run into the end of the year. But as you've heard me say a lot over the last year or so, things are a little bit weird right now, so we don't know if things that have been historically true are going to continue to go through. So we'll see how it is. Don't get me wrong. I'm not in the it's different this time camp, but we do have to pay attention to some external forces that are going on to this market. So let's jump right in with a quick recap of what happened last week, and let's see what's going to happen this week, and let's see what's going on. So Monday started off a little changes, and then market came for sale pretty soon thereafter. The market gave back most of Friday's gain as UK Prime Minister Boris Johnson started throwing around comments like he expects a tidal wave of COVID by Christmas time. So the market started to fear Omicron again. There was some stabilizing news on the inflation front that the New York survey of consumer expectations did indicate that an inflation problem may be peaking. The S&P 500 started to stabilize a bit, but could not hold on to that as the markets were already starting to position for the Wednesday Fed report. So the S&P 500 closed at session lows down just under 1%. Dow also closed down about 1%. The NASDAQ down about 1.5%. All the talk was that the market was pricing in an increased taper from $15 billion to $30 billion a month and 2 to 3 interest hikes in 2022. More on that in just a moment. Tuesday was more of the same. Markets opened lower as Pfizer news was that their vaccine was less effective versus the Omicron strain. So only 70%. I still think it's pretty good, but nonetheless, we'll see where that goes. PPI came out, and remember, this is one of the main inflation reports that we have, and it came in hot, a record pace, the highest since 1974. That did not soothe the inflation fears at all. All eyes are going to be on the Fed release and the press conference on Wednesday. Hump Day came about. The market opened flat as you'd expect with so much pending by 2 o'clock Eastern time. But hot inflation numbers out of the UK and disappointing retail sales numbers for the US did weigh on stocks early. Nothing big, just a little bit of weakness until the Fed released, and the Fed released their statement, almost exactly what the market was looking for. High end of hikes for 2022, that's 3 on the dot plot, and more after that in the years coming. The expected move from 15 to 30 billion a month, less in buying. Knee-jerk selling reaction to the 3 rate hikes, but that was by the time Fed Chair Powell took the mic, that the rally had already begun. His tone was much more dovish than the report, than the statement made it out to sound. The markets took off, and the S&P 500 finished up 1.5%. Dow and NASDAQ up over 300 points apiece. Not a bad Fed day. There was a lot to unpack in the Fed report. Too much to do here. The media spent the rest of the week on it and then some, so we'll talk about that another time. As I mentioned before, the end of the year Santa Claus rally may take this market higher near term, but we do have a lot to look at into 2022. We'll talk about that in the coming weeks. And what you've heard me describe as before is the back and forth. Again, we saw it again Thursday. Everyone running to the other side of the boat and stocks gave back most of their gains. Digestion or indigestion from the Fed reports. Add in the surprise rate hike by the Bank of England, some European Central Bank actions, jobless claim disappointments, and it was even starting to look more like the Build Back Better bill will get pushed into 2022. At least the discussion will. High valuation stocks took a hit more than most. The NASDAQ was down close to 2.5% on the day. The market's starting to really fear the one thing in addition to inflation that could really turn things negative. That is the possible slowdown of growth. Now, this is what will take us into stagflation, which is the Fed raising rates into a slowing economy. We'll be watching for those signs, and we'll be talking about it here. So Friday, we saw stocks come under pressure again. Fear of the tighter monetary policy, the global growth being slowed by the Omicron strain. The Dow dropped over 500 points, 1.5%. S&P 500 was down 1%. NASDAQ, which was beaten so badly throughout the week, actually was the best performer, only down slightly. The NASDAQ did trade positive at one point. Even it was down at one point, 1.5%, but it had some buying come in and almost finished the day positive. Overall, the week was not great. It was not a positive one, as you have heard. Dow was down 1.7%, S&P 500 down 1.9%, the NASDAQ was down about 3%. Even the places to hide this week were not places to hide. Microsoft down 5.5% of the week. Alphabet and Apple down more than 4% of the week. there were some winners. FedEx and UPS had good weeks. Moderna and Pfizer had a good week. So we'll have to see what happens. As we look ahead into the coming week, a few things to take note. If you're still in the office, you'll start to notice things get a little quieter. So we'll see if the market does that too. I'm not so sure that it'll happen. This week we'll get a few more earnings reports of note. Nike, Micron, CarMax, just to name a few. We'll also get the GDP report and the consumer confidence report. As of now, I don't see any Fed president speaking, but don't count them out. We'll also be hearing from President Biden about Omicron response and the growing problems. We have seen some pretty harsh lockdowns overseas, but still not a lot of hard data on the new strain, and I don't see lockdowns happening here in the United States. As we start this home stretch into the last few weeks of the year, I'd look quickly at what we know and what we don't know, since, as always, that will determine the next catalyst in which direction it goes. So we've finally gotten the plan from the Fed for at least the coming weeks and months. Now the Senate votes in January to keep Powell, or should anything go off, or not. So anything that goes off course in this will certainly make waves. We've also seen a pretty good earnings season across the board. We're seeing growth level out, not turn negative, and that's good for markets. We know that there is still a lot of pent up demand. Are we totally changing our habits yet? I just don't think so. But if you've been on a plane lately, I don't think we've lost the desire to be mobile and travel. So we'll see how that comes about. We've seen a lot of the inflation pressures come down a little bit, incrementally, but not on an absolute basis. Recall, we spoke about this last summer in regard to air travel, because air travel numbers were coming back up, but they weren't anywhere near where they were before. So same thing like shipping containers, for example. Those prices are coming back down from where they were, but not to where they were in 2019. So we also recently saw a new spike in lumber prices, not as high as last time. We'll see how all that works out. We know that we have nearly 11 million jobs unfilled, and we know that the unemployment rate is low. At least we think we know all this. A lot of this comes from the high frequency data that we get every week, but some of that the data we get is stale by the time we get it already. So the main things we do not know is what the data on the Omicron is going to look like, and how it's going to come out, and how the nations of the world are going to react to it. How are the economies going to come through it? As we move into the last 2 weeks, there will be more volatility for sure. Even as volumes dry up and less people working, we'll still see a lot going on. This remains a pretty busy time in the market. Not to go too much into the Friday video topics, but if you have gains or losses that you want to take this year, let's make sure we get it done. Time is running out. So call me if you have any questions. Keep an eye out for the Friday planning videos. This week it'll be on Thursday because the market is closed on Friday for Christmas, and I will do my best to get a December 31st video out as well. It's just a little under 2 weeks. So have a great week, and we'll talk to you soon.